Alrighty, so let's just do some very basic sort of drawing on order flow. Just going to stick to one time frame and hopefully just kind of get your minds to sort of getting used to seeing it. So let's kind of zoom into some old price action over here, right? So I'm not going to bother drawing on swing structure and internal structure and labeling charts and all this thing. I'm literally just going to draw it on from supply and demand ranges, and we'll dive into kind of the more like proper chart walkthroughs a little bit later, where we'll really talk through price action and start to think more about trades and things like that. But for now, let's just practice drawing on these demand ranges. So let's just start here, right? We can clearly see from the low to the high that price breaks that range, right, to the upside. So that gives us our demand range. So we have a range, initiation, mitigation, and then we continue, right? So again, draw it from the high to the low, drag it across to where it's broken, and then we have another demand range. You can see price initiates out, it comes up, backs and mitigates it, and continues. So obviously from a refined demand perspective, potentially we would have had this drawn in here, and when we got that break of structure to the upside here, we would be looking for potentially price to pull back in. But we know that price does not have to pull back and mitigate refined demand, right? And this is just showing you, but the actual bullish order flow is continuing because it's mitigated the range and now it's continuing to the upside, right? So, oops, demand range. So draw it from the high to the low, drag it across from where it breaks, and then we get that initiation out. Now, you can have obviously smaller and larger ranges too. And this is where order flow can get a little bit messy, right? So again, you've got this little range here from the low to high where it breaks out. Then what happens? Well, if you draw from the low to the high, it doesn't matter which order you draw it, but you just drag it from where the box, right? You could draw it from the high to the low or the low to the high. Obviously, that doesn't make a difference. You drag it across. Does price break to the upside or the downside? It breaks to the downside. It actually breaks there, right? So that then gives us what? It gives us a supply range. And then again, what do we have? We have it from the low to the high, drag it across where it breaks out to the downside, so that's your demand. Now, at this point, because this was initially unmitigated, right? It didn't. You see how it pulls back into it. So at this point, because this was only a tiny, tiny pullback, potentially at this point, if we didn't obviously know what was going to happen, we could hypothesize, right, or have to be aware of that we may have only just created the supply and broken this tiny, tiny demand range just to mitigate this slightly larger, more significant level here to then continue to the upside, okay? And then you can even see the fractal supply within that. This is where I can get a little bit more advanced. All right, we have this like supply within here. It was just to mitigate that. Anyway, let's keep it on kind of the bigger ones, but you can see that, right? So at this point, although we can start to see that we've had a little bit of a chock, right? So there's a chock there, which now means we have the supply and we've come into here. We have to be wary that potentially that slightly larger, right, bullish order flow could have continued, right? And this is where we're gonna have to combine it with all of the confluence that we use. But then once we actually break out of this, right, now it's a lot more obvious that supply is in control, right? This bullish order flow has now been disrupted because if you follow the series of mitigations, right, that was the last mitigation of this range here. Then we have one leg up, we come in, we mitigate it, but we fail, and then we come down. So once that low there goes there, now we can say, right, this bullish order flow has clearly failed, and now supply is in control, right? And now we can look at these ranges, right? So from the low to the high of that range to where it breaks out, okay? And then again, you see how it comes up, mitigates the range, and then continues down. So we have this range here, that's broken out. And then we have from the low to the high, right? It mitigates the range and then continues down. And obviously we know within those ranges, what do we have? We have those smaller supply zones that we would typically look for to trade from, right? But we know price doesn't have to come up to those extremes. But what this helps you to visualize without even drawing structure on, you can see that. Structure shows us the same thing without drawing on these large ranges. And then again, from the low to the high, what does it do? It pulls back, mitigates this previous range, and then gives us a new supply range. And then in this instance, what do? Go from the low to the high, right? We pull back into the prior range and we break out. From the low to the high, pull back into the prior range, right? And then we break out. And obviously there's smaller ranges within here and stuff, but let's just kind of focus on these for now. All right, from the low to the high, and we have this range here. Okay, price doesn't pull back, it doesn't have to. And then we have this range down here. Just drawing a few more, just so you guys can kind of get a feel for it. All right, so price breaks up there. Now, what happens is we get price break this small supply range, so we get that bullish change of character, so we can draw it from the low to the high. All right, oops. String this across, keep it nice and perfect for my chart OCD, so high time frame demand range, right? So then we break out to the upside, okay? And then from this low or high to this low, right? And then we break out. And then what happens? then we break that range to the downside. So if I actually rein this in, draw from the low to the high, right, drag it across, where does it break out? To the downside. So now supply is back in control. Oops. Get a bit quicker at drawing this. And then again, all right, we pull back up to mitigate that supply. And you can see the larger range, right? What is that? From the low to this high, you see how that was just one larger range, right? For price to mitigate. But you've got those smaller ranges within there. Okay, and this is where the fractal nature comes in. And you've got this larger range, right, as price breaks out. Okay, but then price breaks out of that larger range to the upside. Okay, so you draw from the high to the low from that leg. And you can see that this was just one demand range, right? So you can rein that in a bit then at that point there. And you can see prices just coming back to mitigate this demand range. But you can see there was earlier signals that potentially that was going to happen when you see this shift here, right? You've got a supply range within here. And you can see how it can be quite fractal. Right? But at that point, as we break this high here, because at this point, supply was still in control. So we didn't know price was going to break out. So although it breaks this little supply range here as price comes up, it's not until you get that IBOS there, because look, you got that movement, that movement, that movement, that movement, then it breaks out of the supply range. Let me get rid of some of these lines. All right, got the larger movements. If you look at the larger swings in price, you got that movement there, and you got this pullback into the larger range, all right? And then you've got that next leg down out of the range. So we would still say bearish order flows in control at that point, right? You've obviously got smaller ranges within it, so price comes into it, it reacts, then it breaks up. So that's the first sign you've got a chock, but it's not until you get the IBOS here that now we can say, okay, that supply range has been, broken. And now we get rid of these orange lines. You'll see, should be a lot clearer. We now have that bullish order flow. So this would be your 4-hour change of character, right? So that's your first signal that we're having an internal pullback. But then this here would be your 4-hour IBOS, right? And that's only when you get that you can see now, right? That shift in the larger structure where supply was in control, the larger internal structure was in control. Potentially this is your swing structure, right? It's the same, all the same thing, right? In terms of this concept that we're looking at here in terms of order flow, right? And then we would do what? We look from the high to the low that broke out the range. That's your demand range. So I'll draw on so it's visually easier to see. So high time frame demand range from the high to the low, drag it across to where it's broken, right? And then we can rein this into there, just make it nice and pretty. And then you have your next pullback. So we initiate out of the range, we pull back to mitigate the range, and then we continue. So from the high to the low, drag it across. And you see how we now have sustained bullish order flow, right? Now what happens? Well, again, you can draw from the low to the high and drag it across. Does price break to the downside or to the upside first? But it takes a while, but it breaks to the upside. So we have that sustained bullish order flow. We continued, right? And then what's happened? We've now come up to mitigate, right, that prior supply range, right? Obviously you can refine it a little bit to that candle. We've come in from within here to mitigate that, right? This range here, let's just leave it nice and open. So then at that point, what happens? So then we break the low down here, right? So now we have bearish order flow, right? And we could technically draw it from there. We can keep it nice and clear here. All right, and then you have your larger supply range. Sorry, you got mitigated here, and then price breaks out of that range, right? To come into here, and then you have smaller ranges get shifted because obviously you've got this one as well. So you could think at this point, right, when you get that change of character here, that potentially, now we're going to see a bigger movement. But what is it? It's just to facilitate a pullback into, because you've got to look at the larger swings as well, right? This is a big movement down, big movement up. Big movement down, right? So that's your IBOS or a swing structure, right? And then that'd be your pullback into here. So although we've had a little change of character here, right? Or maybe let's call this swing structure, right? That'd be a swing boss. That could be your IBOS, but it's just to facilitate what? A movement into this protected high. That's your weak low, right? Swing pullback, swing push down, swing pullback, and then we continue to the downside, right? But what happens when you get those pullbacks, you get a shift in the internal order flow. So from that high to that low, and then here, right? And then it mitigates extreme supply, and then we ended up switching bearish, right? we come down, mitigate that range, and then we continue down. And you see how all of that was just what? To create that next larger range. Okay? So on and so forth. And you can kind of see how that happens, right? We have bullish order flow, it gets disrupted, and then all of the supply ranges are respected. And within those ranges, you can have little shifts. Like here, because this probably was most likely a daily boss. So what do we expect after a daily break of structure? We expect that daily pullback, right? So it's just to come in and mitigate this decisional daily supply range here. And in order to do that, what happened? The 4 hour then switched bullish, and you get sustained bullish order flow, mitigates what? The prior daily supply range, right? The entire swing range is there. It's probably like a weekly candle, right? That's your daily range. Comes back and mitigates that range. Then the 4 hour order flow and the 4 hour structure shifts bearish. And then what do we have? Then we have, then we have the sustained bearish order flow. And within that, what happened to facilitate this pullback? We had that switch bullish, and then once it switches bearish, that protected high stands, and then we can take out this weak low and we continue, right? So you can kind of see the fractal nature of the market there. So I'm going to redraw on that, and you can go back and see this. And this is what I mean by, like I said in the other video, if you were stuck, if your trading view literally froze on one time frame, no matter what time frame it was, if you zoom out enough, you can make sense of it all. Like just draw on these larger swings in price, right? Supply range. Right, and then you get the next daily supply range. Mitigates the prior range, push down, pulls back to mitigate the prior range, pushes down, right? And then pulls back up to mitigate the prior range, right? You can see this. Oops. So it's daily swing low, right? Daily swing high, daily swing low, daily swing high, daily swing low, daily swing high, daily swing low, daily swing high. And you see how it's just each range, right? That's your daily swing range, right? It comes down. You got another daily swing range, and it comes down. Right? That would be, say, your daily structure. Get rid of all that. And then within that, you've got your 4 hour structure, you can see, right? Lower low, 4 hour lower high, 4 hour lower low, 4 hour lower high, so on and so forth. Right? Then it probably switches bullish there. It ends up being not a fake signal, but it's only a short-term bullish trend on the 4 hour chart. Why? Because it's just a daily pullback to mitigate the daily range. And then we continue down and switch bearish again, 4 hour lower high, lower low, right? And then we switch bullish on the 4 hour chart around here. Potentially there's a swing in here. You can see what's going on. We temporarily switch bullish. Why? Because it's just a daily pullback. That's a daily protected or strong high to then continue that movement down. So when we come into this level and then we get that shift in order flow and the 4 hour switch is bearish, we then expect what? The bearish ranges to continue and to hold until this low is taken out, right? And then again, then we have a daily break of structure. So this is your daily high, this is your daily low. The 4 hour then switches bullish to what? To facilitate a daily pullback into the daily prior range. Doesn't come up that high this time, like this one came all the way to the extreme. This time it just taps into the bottom of the range. The 4 hour then shifts bearish, order flow on the 4 hour shifts bearish, then we can target this weak daily low, right? And the ranges get respected until that's low taken out, until that low is at least taken out, right? And then we continue to the downside, so on and so forth. And you can see these larger ranges without having to go on and draw structure and everything, just to get a feel for it. Like, practice doing this. I personally find it quite fun. Just seeing it, and obviously you can dive into that. There's smaller ranges within each range, etc., etc. This time it spikes above it, fails to close above the high, and we continue that bearish order flow, right? And you can see these larger daily swings in price. This can really sometimes help you to visualize multi-time frame analysis if you kind of struggle with that. And we've got another small range within here. Right, and that's where we're pulling back into at the current time and price. And then even within that daily pullback, what do we have? We have those internal sort of shifts in order flow, right, from the low to the high. We break out, initiation, mitigation, continuation, right, from the high to the low. And then you have smaller ones within here. Right, and then when that shifts, you then obviously get supply then in control. Sorry, I know I'm talking really weird and slowly, but it's trying to keep up my drawing as quickly as my brain and what the points I'm trying to make, but hopefully you guys can see, right? And then you've got ranges within ranges. Drag it across, doesn't get mitigated in this instance. But yeah, you can see them, right? smaller range until that weekday low here goes, right? They all hold, right? That larger range. So although you come into this low and you get that, it's not even a bullish chop, but this high breaks, right? It's the supply range holds. And again, that range holds here. And then we take out the low. And so on and so forth. Right? It's not always going to be perfect to get disruption of the order flow there, but order flow is a little bit messier than just structure on its own. But yeah, I'll leave that there. We'll dive into some slightly more advanced stuff now in the next lesson. And then once we kind of get that theory out the way, then we'll do some kind of, much more in-depth actual walkthroughs of mapping everything on, using all the concepts that we use. And we'll really see how we're kind of going to piece this together to actually use with our day-to-day trading. But at this point, kind of just wanted for you guys to get a quick visualization of how we draw these ranges on, and you can kind of see those shifts in order flow. Like, spend more time than I have done this. I just don't want this to be like a 3-hour video, and you can really dive into, like, even within that green pullback, what do we have? We have, I'm not going to draw it on, but you have that internal order flow, right? And then what happens? It gets disrupted, and then we go for the week high, right? And then we come down, and then the order flow stays bearish until we take out the overall week low, right? Because that leg is now done, and now we're getting the next push down, so on and so forth. So yeah, hopefully that makes sense. Watch this as many times as you need